Snowflake and supermicrocomputer are really important in the development and growth of artificial intelligence technology. People who invest in them could make a lot of money in the future because these companies have what it takes to grow. Right now, the bonus is you can buy these stocks at good prices. These two companies have many years of huge growth ahead. So if you are interested in AI growth stocks and want to move along with the AI growth journey, then this video is for you to watch. I will share their business models and financial trends to help make the right decision. Let's get started. Thank you again for joining me today. I am Pankaj. As always, everything shared in this video is for informational purposes only. But if you hit that like button below, that would be a huge contribution in the growth of this channel. In every major investing trend, there are companies that come out as the best. Amazon ruled online shopping, Google dominated search and digital advertising, and Microsoft dominated computers. Who will be the leaders in artificial intelligence? It might be too soon to know for sure, but these two companies are looking very promising to take the best AI spot in future. And we will analyze what are the trends and qualities they have to be at the forefront of AI revolution. Snowflake is at the center of artificial intelligence since it does a lot of stuff with data, and data is the heart of AI. Let's take a look at some facts about Snowflake. Snowflake is a cloud-based data warehousing company. It provides a platform for businesses to store, manage, and analyze their data. Its technology allows for fast and scalable data processing. Its innovative approach to data management has made it a prominent player in the AI market. Wall Street is really excited about NVIDIA and AI chips, but for AI to work well, it needs good data. That's where Snowflake comes into the picture. As we have seen earlier, Snowflake is like a big storage and analysis system in the cloud where companies can put their data. Customers can also access third-party data on Snowflake's marketplace, where companies can efficiently manipulate and enhance their data as needed. Let's take a look at Snowflake's financial data. Its share price is running in its lowest territory after the huge spike a few months back. The current price is at the lowest after it has gone public in the late 2020. Its revenue growth year on year is almost 36%, and in the last 5 years, its compounded revenue growth is almost 96%, which is quite impressive when we compare with its peers. Cash flow is positive, and it is sitting on a huge pile of cash, almost $4 billion, doing a lot better than its peers again. What is Snowflake's growth engines? Snowflake grows through two primary engines. First, it works with more customers. The company currently has almost 9,000 customers, and customer count is increasing quarter over quarter, who are contributing over more than $1 million in product revenue. Second, Snowflake builds customers based on computing and storage usage. Since data keeps growing a lot, customers will probably use more of Snowflake services over time. That's why Snowflake has a high net revenue retention rate of 131%, which is quite impressive. Net revenue retention has become an important metric to watch for the companies using the software as a service model. If AI becomes as important as people think as of today, every company might need AI to stay competitive. Since there are so many companies globally, Snowflake has a lot of room to get more customers. This means Snowflake could keep making a lot of money for many years. As per the last quarter report, the company is making a good amount of cash. About 42% of its revenue turns into free cash flow right now. Snowflake became a public company toward the end of 2020, but since then the value of its shares has kept going down, especially after the market bubble burst a few months later. Right now, Snowflake's worth a lot less than it used to be. Moreover, it is hard to predict when the stock will stop falling, but it's obvious that a lot of the excitement around this stock has faded away. Long-term investors who believe in Snowflake's business model should consider the stock a high-potential long-term investment idea that could lift a portfolio over the coming decade. Another AI company that I will be talking about is Supermicrocomputer with the ticker symbol SMCI. Earlier, I talked about that artificial intelligence needs good data. Further, artificial intelligence needs really powerful computers in special buildings called data center. But not many companies can set up and run this system all by themselves. That's where Supermicrocomputer comes into the picture. They sell ready-to-use data center systems built on its proprietary servers and hardwares. Demand for supermicrocomputer systems and data centers has exploded over the past 2 years. The company's growth has led to really big returns for investors. The stock has gone up almost 4,000% in the last 5 years. But some analysts say that the stock isn't too expensive right now. The price has dropped a lot from its highest point in the past year. Right now, the stock is trading at a forward PE ratio of 33, which is quite good for a growing technology company. The company leaders expect the revenue to grow by 152% compared to last year's fourth quarter. Also, experts think that the company's earning could increase by more than 50% year over year for the next 3 to 5 years. Looking at the above data, it has a lot of room to grow. Few more data also backs up the trend of the growth story. Newmark estimates show that the need for data centers in the US will double by 2030. This big growth in the whole industry helps Supermicro Computer. The company's leaders think that they are growing even faster than the industry itself. This means they have become the top choice for these data center systems, like how Nvidia is the top choice for AI chips these days. Looking at Supermicro Computer's valuation, if analysts are correct about its future earning growth, the stock's current PEG ratio of 0.6 suggests it's a great deal for the expected growth. This doesn't guarantee that Supermicro Computer will meet its potential, but even getting close to expectation could lead to huge investment gains for people who plans to invest for a long time. Looking at the above financial and business outlook, it appears to be the right time to invest in them to get a nice return in the coming days. Write down in the comment section if you got something out of value in this analysis. Also, if you found this information valuable, don't forget to like, share and subscribe for more financial insights. Until next time, happy investing.